Hello and welcome back to Dukascopy TV. Now, we never go too long here without discussing the diamond industry at some point. And in the studio, I'm joined by a man who knows quite a bit about diamonds, Abdallah Chatila. Abdallah, welcome to the studio.
Nice to be here.
You can trace your family business back to 1860. Since your last appearance on this program, you mentioned that you felt that the diamond business was not performing as well as it had done in the past, and this is linked to the financial crisis and economies. Is that still the case? Have you seen so far this year better growth? Have you seen it picking up, and is your business feeling that growth?
Look, first of all, it's important that we distinguish the diamond industry. Diamond industry is a very large industry of 75 billion. But the 75 million goes from the mine until the end user. What we do is probably only trading diamonds. The trading diamond part represents approximately $10 billion. In this segment, everything which is smaller goods have been doing quite well this year because of the China request for diamonds is growing every day. As I said last time, diamond consumption is linked to GDP, and still, even though the GDP of China is not going up so high, but it's still high enough for the diamond growth to go along. The higher quality, the higher level of diamonds, the ones that are more expensive, that 5 and 10 carat up, the prices in rough have gone up over 20%, but only because of lack of supply, not because of demand. But it wasn't affected directly to the price of the polish because of the lack of demand. But nevertheless, the prices are steady, and they're going up very slowly, but they're not going down.
We'll come on to supply a bit later, but what are some of the sort of main challenges that you face as a company actively trading in diamonds right now? I mean, you mentioned previously before that there was that link.
Illiquidity. Illiquidity, because first of all, it's very hard. It's a very odd market because it's difficult to find the goods and it's difficult to sell the goods. So, and at the same time, because goods are rare, whenever you see something interesting, you want to buy it to make sure that you have it in your inventory. So this will bring you an illiquidity in your inventory, which is difficult to manage for diamond trading companies.
And what's the sort of immediate solution? Is there an immediate solution for that?
Immediate solution would be to sell a little bit more or to buy a little bit less. Or today, banking is not the solution because banks are not helping much. They're actually bringing a lot of the illiquidity because they're lowering the level of lending. So it's really to play around with your cash flow, maybe buy less than what you sell. When in a growing market, you always have to keep on buying to keep the pace.
Okay. Now, I mean, Russia is investing more and more in diamonds and the development of mines. You mentioned last time that 80% of the industry is monopolized by 5 companies. Is that helping or hindering business in the current climate?
It does help because having a limited big players will help the whole industry to be internally regulated in price-wise. Means we know that none of them we're going to start dumping the goods. If you had a mass of producers in a more illiquid market, the first reaction would be to dump goods to be able to generate more liquidity. But having those 5 big players will help keep the market much more steady.
And Russia's becoming a big player now too.
Russia represents world rough production is around 15 billion. Last year, Russia produced 4 billion out of the 15. So they are quite big. Russia, Arrosa was owned 89–90% by the Russian government and by the Yakut province. Last year, they sold off in the market 15% of the asset to bring more money out of the investors. For Russia, it is very important diamond industry because they want to generate more income coming in, hard currency, and also helping the Yakut province, which is quite distressed. Last year, it brought over $600 million of income in the Yakut province.
A lot. Abdallah, just before we finish, you said also in your last interview that the lack of new mines being found is cause for concern in the industry. But don't the big major companies control the supply of diamonds, arriving on the market anyway, and therefore there may be perhaps a lot more circling than you may lead us to believe?
Inventory levels are higher than what we believe. I'm certain of it. But minings that will be discovered, they're all known. I mean, to be discovered, we don't know about, but that have been discovered, currently discovered, we know of. So maybe they're lying about what they have in inventory now, but they cannot lie about what they will have because it's all up in public. So we know what is there. But as I said earlier, they are definitely controlling the market.
Mm-hmm. And they're controlling the market, and you say there could be a potential for them lying about what's in their inventory. Doesn't that affect custom? I mean, doesn't that affect the idea of business if someone says, well, look, why don't you tell us exactly what is in your inventory? Or is it they don't mind because it's such an elitist sort of...
It is very difficult to, first of all, to tell them what someone really has or doesn't have. De Beers have done it for the last, when De Beers was owned by the Oppenheimers, they were doing it in the 80s when they were representing 60-70% of the market, and they were controlling the market that way. And it's good that someone is regulating the market. It's like any national bank who's playing with their treasuries.
So you would call that regulation?
I call it regulation, and I think it's necessary.
Okay. Abdallah, thank you for coming into the studio today
and
joining me. That's all for the moment. Thanks for watching here on Dukascopy TV. Stay with us. We'll continue to bring you updates and interviews throughout the day. But for now, from me, bye-bye.